What's good? What's good? It's Sir Willoughby, the stock hustler, man. And happy Monday to you. I hope your Monday is going good. Welcome to the Hustle House and the Stock Hustler Network. Today's podcast is brought to you by NexGen SKOOL Community. Learn how to come trade, invest, and get my weekly buy alerts, get my weekly sell alerts, and my weekly watch list. You can get these exclusively in the SKOOL community and Next Gen Traders Community. The link will be in the description below. So, come over, let's learn, and let's get some money. I'm gonna give you some casual talk real quick, man. I hope today that you having a great day. The market is already bleeding off so far. We had got a rebound on the Dow, had 50,000, hit a 50,000 rally on the Dow Friday. So we recently just now getting a pullback as the markets just opened 8 minutes ago. You'll probably get this a little after the market open, but I'm coming to you right now as market just open. You got the S&P down 0.08%. You got the Dow down 0.17%. You got the NASDAQ down 0.12%. The Russell is still kind of on a rally. It had rallied up to 3% on Friday. Let's see, can the Russell 2000 hold with the small caps? It could be some money. We got big earnings coming up this week. Um, Let me give you a little bit of those earnings we got, man. A few plays. I'm not really playing risky on the trades this week, but we do got some good earnings coming up, and this will tell us a lot about where the market sentiment is going. Is money being made in Q4? What we got to look forward for in Q1? Let me pull this up. So today we got we don't have any big names today. So we got Coca-Cola coming up on Tuesday. We got Robinhood coming up on Tuesday. Ford coming up on Tuesday. Lyft, that's going to be a good one. We got Lyft coming up on Tuesday reporting earnings. CVS will be reporting earnings. AIG will be reporting earnings. We got on Monday you got Upwork reporting earnings. That's going to be a good one. Keep your eye on Upwork. So coming up Wednesday, we got Shopify reporting earnings. Cisco will be reporting earnings. McDonald's, T-Mobile. We got a big tech earnings week coming up, man. Small takes. So we got DraftKings reporting earnings. Keep your eye out on DraftKings. I will drop a play in the next gen trader community, and I think we're gonna play. We're gonna end up playing DraftKings off this bottom. DraftKings has been selling off for the last 3 months, and we got cooked on one play, but I think we can come back and get some more if their earnings come out pretty good on Thursday. All right. So what else we got? We got Coinbase coming out with earnings on Thursday. I got Wendy's with Friday earnings. And those are part of the biggest earnings coming up this week. We're gonna keep our eyes out on that. So I especially just want to pay attention to Lyft. I definitely want to keep my eye on Lyft because we got again Waymo has the autonomous cars coming, so they could play a part in that. I really want to see what their guidance look like. I don't care if they do beat or not beat. I just want to know how their guidance are going to be moving forward for 2026. So I'm gonna keep my eyes on Lyft. I'm gonna keep my eyes on Robinhood. I'm keeping my eyes on Upstart. I'm keeping my eyes on Upwork. I'm keeping my eyes on Coinbase and DraftKings. So if you're in the next gen trader community, be on the lookout for a watch list coming later on today. We're gonna keep our eyes on some of these plays. Let's go check out the heat map. All right, heat map gonna pull up. All right, heat map may not pull up. Heat map don't pull up. We ain't tripping. Let's just go on right into it. Let's try it one more time. Let's try the heat map real quick. Heat map not pulling up. We're gonna keep on moving. So we're gonna dive right on into gold. So you got gold announces 5,000, back at 5,000 after this recent sell-off this weekend. The market is still choppy, but you got gold steady rising, metals are steady rising. So that means a lot of consumers are moving their money from tech. A lot of retail traders and big institutional traders are moving their money from tech individual plays and putting in these solid metals and these guaranteed asset pools. So gold advances right back up to 5,000 right after the recent sell off, and that's something we need to keep our eye on. A lot of people are shorting the metals, and you can make good money off shorting the metals, but with it spiking back up so fast, I honestly, in my opinion, went short. And anything that I give you in today's video, any of my videos, is not information for you to buy, hold, or sell. I am not a financial advisor. So if you need help understanding the market, please go seek financial advice so you can make the best educated decision for yourself. I'm just here with a guy on YouTube providing you great information about my trades and my investments. So let's go back up to 5K. That's amazing. We got Goldman Sachs came in today. Goldman Sachs come in and this morning and they say that, hey, we're going to warn traders that, the stock market is still got a lot of selling to do. It's a choppy market. So we need to keep our eyes out on that. So to be very cautious. This is what Goldman Sachs is telling us. And they're a big money hedge fund in the bank to where they understand and can see with the forward data where the market could potentially head. And we also had a lot of levels get broke. And this is triggering a sell-off or a bear market, so to say, with the data. So the Goldman Sachs article basically telling us that, hey, after rebounding on Friday, you shouldn't be so quick to be jumping right back in the market because intentionally another sell-off could come. The S&P hit a trigger level that where we at now? Give me 1 second. Give me 1 second. Let's go here. We're gonna go here. Let's go here. And we're gonna pull this article up. Say Goldman issues a blunt warning to beat up soft stock investors. Goldman Sachs may be just the beginning of Goldman Sachs warning. One should look no further than how the rise of the internet in the early 2000s hammered the newspapers. Same thing AI is doing right now. One lesson from historical examples, this is what Goldman Sachs is saying, of industries facing disruption risk is that share price stability requires stability in earnings outlook. Newspapers, for example, faced risk from technology disruption as the internet grew in the early 2000s. The share price of the group declined by an average of 95% between 2002 and 2009. Goldman Sachs strategist Brian Sider said in the new note. Sider also added the multi-year decline of newspaper stocks ended only as earnings estimated bottom, and the litigation disruption of tobacco followed a similar pattern. In this case, the uncertainty around the eventual impact of AI means eventually, the impact of AI means near-term earnings results will be important signals for oil of business resilience, but in many cases insignificant to disprove the long-term downside risk. The news flows around software stocks has been ugly as investors try to gouge how many profit in the space as at risk because of rapid AI advances. So what this telling us is that Goldman Sachs saying that, hey, just because AI is advancing so rapidly that we could possibly see internet plays die off, or certain stock plays. So what necessarily what Goldman Sachs is telling me and what I'm getting from this article is that we could be in the AI bubble, and this bubble could get ready to pop at any moment, and we could be going into another 2000 internet bubble where the market sold off tremendously. So just keep your eyes on that. Keep your eyes on these articles, man. History do has a time tends to repeat itself, not exactly the same steps, but it definitely has a chance to repeat itself. So pay attention to the story data and the news that's coming out. Let's talk about the VIX real quick before I let you guys go. So we're going to talk about the VIX. The VIX is like an inverted index. So whenever the market is selling off bad, the VIX is going up higher. Whenever the market is in a bull market, the VIX will be selling, trading lower. My critical levels that I like on the VIX is this $18 level. So the VIX recently traded over $18, issuing on sell off to me. And usually after the VIX go over $18, it's selling off. So I want to say we need to keep our eye on the $20, $22 level on the VIX. If we keep our eye, if it goes over the $22 level, we could be heading into a slight bear market before we go into a full correction. So this is a way for you to understand how to use and invert the index like the VIX. So keep your eyes on the VIX. This is a main index that I use to let me know when bears, and when it's time to play puts and when it's time to play calls. So I like to keep my eye on the VIX. This is so when the VIX is up, the market is selling off. When the VIX is down, the market is in a bull market. It's running, it's running, it's running. So take a screenshot of this chart to kind of get my levels, and you'll know what cycle you're in when the VIX is trading up or down. Right now, we're in a kind of mixed economy right now because the data and the economic news is so uncertain. So just keep your eyes on the VIX, and that's the best way to kind of understand the VIX. If you want to get more of my plays and you want to understand more of this, you want to dive deeper inside of the VIX, deeper inside of how I find this news, and deeper inside how I interpreted the articles, so we can understand exactly how to move forward without all the fluff in between. Join the SKOOL community over here at NexGen Traders SKOOL community. The link will be in the description below. It's definitely cheaper than $1 a day, so you will get your money worth. You will learn. You will earn. Come on over there. I love to see you guys in the SKOOL community. Peace and love. Happy trading. I will come back on here later on to drop a few charts on what I'm looking at for some puts this week. So just keep your eyes open. Trade wisely, invest wisely. Peace and love. Have a great day.